That is very comfortably the second worst growth in living standards that we've had since the late 1970s. And by very comfortably, I mean the third worst is more than twice as good as what we've got this parliament. The only one that beats that is the last parliament, when household living standards actually fell. So if you're in this world where everyone is muddling along and things are getting worse and then not really getting better, that makes all of these trade-offs and all of these tensions and all of these how do we balance the winners and the losers, that makes them so hard to navigate. And I think that is and has been sapping the ambition. What we didn't see was, well, what are we going to set out and what's the actual big picture plan to try and change that trajectory going forward?
Hello and welcome to the IFS Zooms In. I'm Helen Miller, Director of the Institute for Fiscal Studies. This is the morning after the night before. Yesterday, Rachel Reeves delivered her second budget and we have been up literally all night analysing what it all means. So today we are going to try to bring you the summary of that and chew through what we learned. At a very high level, the big news yesterday was that after months and months of speculation about the big fiscal black hole that Rachel Reeves might be handed by the Office Budget Responsibility, it didn't materialise. Actually, the forecasts were much better than most people were expecting. In the face of that, Rachel Reeves made a choice. She chose to increase taxes, and basically to do so for two reasons. In part, she increased taxes in order to spend more, and in part, she increased taxes in order to give herself a bigger wiggle room, a bigger so-called headroom against her fiscal rules. And credit to her for doing that, because that meant higher tax rises than she would otherwise have needed. The single biggest tax measure was a freeze in the tax thresholds, but there were many other measures, something like 75 new measures in the scorecard. So we won't go through all of those today, but we'll try to pull out for you the high-level shape of what's happening to the public finances and the choices that the Chancellor made. So to do that, I am joined by, and also very tired, Ben Zaranko and Christine Farquharson, who are my wonderful colleagues here at the IFS. Welcome to both of you. Shall we start with those forecasts, Ben? Because for months and months and months and months and months, everyone's been speculating about the downgrade to productivity and the fact that would probably lead Rachel Reeves to have to do a fiscal consolidation. And the surprise when we all opened the books, some of us opening the books on live TV because the OBR had leaked them in advance or accidentally published them in advance. The big number that just jumped out was that there was no big fiscal repair job in those numbers.
Yeah, that was a big surprise. I think it wasn't just us. I think it was almost everyone who was looking at this, maybe everyone who was looking at this, were baking in a big expected downgrade in the outlook for productivity, which had been well trailed by the OBR, recognising that they've been overly optimistic for quite some time and productivity growth hasn't been growing as we'd like. That was still in there. It's just that there was this other stuff going on. So there's some extra spending pressures which were built in, which no one was really anticipating, on things like welfare, on things like special educational needs.
But that would have made the picture even worse.
That made it worse. But then this, out of nowhere, this huge upgrade in the receipts forecast arrived, which comes from the OBR thinking that one, higher inflation, higher wage growth are really going to push up tax receipts by basically enough to offset the productivity downgrade. And then on top of that, they think that the growth we are going to get is going to deliver more tax revenue because more of it's going to come through the types of activity or types of spending that we tax more. And get into the details of that. But combined, if you take all of these things together, rather than being a big stonking downgrade that left the Chancellor facing a huge repair job, she faced a pretty small, almost if you put it on the on one of these charts with the full axes, barely noticeable downgrade.
And it's worth underlining how lucky she got on tax revenues for a couple of reasons. So, Rachel Reeves herself has emphasised that she's been unlucky to be the Chancellor who is holding the public finances when the productivity downgrade happens. Nobody wants to be the Chancellor when that happens. But she got extraordinarily lucky on the tax revenues, not just because they kind of came right into the rescue at the last moment, in the sense, but also because we haven't seen any evidence of this increase in tax receipts in the data yet. So, which is one of the reasons I think why the forecasts that were outside of the OBR weren't picking up this big increase. Because look at the data from this year and you're not seeing inflation feeding through to higher receipts. You're not seeing this tax-rich growth. And yet the OBR has basically made it look really lucky in saying that we think it's going to ride to the rescue in coming years.
Yeah, I mean, not to make this too into the weeds so quickly, but we looked at
love the weeds.
Well, I know. I know. But we looked at the data for borrowing so far this year and the tax and the spending data. And inflation's been stickier than expected. And generally, you'd think that if inflation's higher, prices are higher. That means prices in the shops are higher, VAT receipts would be higher, and so on. There's no sign of that. And there's no sign of income tax receipts coming in higher than expected either. So we thought, we're not going to adjust our forecast for this. We don't think it's going to persist. The OBR have gone, well, it's sort of internally coherent, but they're building in higher wage growth and higher inflation and so on. And they've built in some really chunky upgrades. That is a risk to the forecast, right? If that increase in receipts doesn't now materialize, we might end up in a worse position in a year. But yeah, I'd say it was probably a welcome surprise for Rachel Reeves when she opened them a couple of weeks ago.
Yeah. But it's more than a couple of weeks ago now, right? So she should have known that news by the end of October. And as she put all the news together, we should spell it out for people. She had the big downgrade in productivity, the increased spending, she had higher tax receipts. Actually, in what's called the pre-measures forecast, so the forecast that the OBR does before taking account of any policy measures the government had, actually she still had a surplus. She was still meeting her fiscal rules. Even after you account for the downgrades the cost that you would need to bear to not go ahead with the disability cuts, the U-turns from spring, that would have only left her with a small deficit. So really not the backdrop to the budget that we expected. Before we go into the kind of nitty-gritty of the kind of the big tax measures and what the Chancellor did do, let's pick up on the one element of the spending pressure, because one thing that stands out here is special educational needs. It's growing quickly and the government's changed kind of how it is in the forecast. So Christine, work us through that.
Yeah, so special educational needs and disabilities in England has been a budget line that's been rising really, really fast. Regular podcast listeners might have heard us discuss this at some length over the summer in our episode on whether the kids are okay, but that was really focused on children's outcomes. Here, today, what's new is that we're really talking about this in a fiscal context. And the OBR deserves big credit for that, because the reason that we're talking about it today is because the OBR has, for the first time, given us official forecasts on what spending might look like going forward. We have seen some really big increases in the past, and this year we're seeing a 14% real terms increase in SEND spending based on some sort of provisional outturn data. So this is huge. This is a really big pressure. What's happened so far is that local councils have been responsible for delivering the SEND provision. And the reason it's going up so quickly, or one reason, is because that's a legal mandate. They're required to offer this provision to any child who has an education, health, and care plan. What that's meant is that because the funding that local councils are getting from central government has lagged behind those legally mandated spending pressures, councils have been building up deficits. That's become a bigger issue. That's set to become an even bigger issue still. And so central government has now said from 2028, we're going to assume the risk of that overspend. So we're going to put all of that into central government departmental spending. If it's a lot higher than we thought it would be, we're going to have to figure out a solution. That solution could look like we're going to do some reforms that try and bear down on how quickly the spending is rising. That solution could look like we're going to top up these budgets, and that could mean we're going to top up these budgets from within the wider education envelope, or that could mean we're going to top up these budgets, but we're going to recognize that it's not fair or it's not reasonable to put all of that onto education, and so we'll use the normal set of tools, spend less elsewhere, tax more, maybe borrow a bit more to top up those overall plans.
And that's really important to emphasise there, right? So we have this spending pressure, and we're going to try and put out some good news in the budget. So as you said, credit to the government for, actually recognising this and not just brushing it aside. I mean, it's becoming a material risk in the public finances, so it's right not to brush it aside. There's been lots of speculation in the media that actually this is bad for the education budget. It's going to mean cuts elsewhere, maybe to mainstream education. But what you said there, Christine, was that they could come back and cut other departments or raise taxes. And Ben, I mean, looking forward to we're jumping ahead a little bit here, but looking forward to the next spending review in 2027, there's a couple of reasons that this budget is going to make that particular review harder.
Yeah, I think on the SEND question, special educational needs and disability question, it's got a lot of parallels to asylum, actually, where the government has been, for a few years, it kept budgeting basically nothing. Asylum seekers would arrive, you've got legal duties and we have to house them, and it incurs costs. And then every year the government would go, oh, there was a surprise spending and we allocated some. And that's been a bit how we've dealt with with the send issue, and now on both asylum and send, the government's been a bit more transparent and upfront about that. I think that's really to be welcomed. But it does, beg the question of, if those things run ahead of those plans, what happens next? At the next spending review, and the government will be weighing up all its different departmental priorities and things it wants to spend more or less on. If those things are still rising as fast as they are now, if we're struggling to get asylum seekers out of hotels and into cheaper accommodation, or if we're struggling to reform the send system, those pressures are not going anywhere. And combined with these, we can come back to this, the government's now planning even larger efficiency savings than it was previously, which basically means spending's growing not as quickly. Some departments are going to be facing cuts. A lot of these problems are sort of being kicked to the summer of 2027, when it'll be unavoidable. These will have to be confronted again, and they'll have to decide, are we actually going to do all these difficult things just before an election, or are we going to try and rustle up some extra cash from somewhere? But for now, it sort of parks the issue, I think, at least for a while.
Parks it until about January, when we're hoping to get the much delayed spend white paper and work out what it is that the central government thinks that they want to do about it.
Fine, well, at least we'll have Christmas off.
But that's an important point as well, that what the government really needs to do in either of these areas, regardless of what they want to spend, for send and actually for disability payments, which are also have been revised up in the forecast. There's more spending on that now. The government needs to actually find a way to reform those areas to at least make sure they're working better for the people they're trying to serve. But sticking with the spending part of the budget for a minute, so that Rachel Reeves had bigger increases in spending in her underlying forecast. Spending was running ahead of where she expected it to be. But in response to that, she spent more. So she actually increased spending, and the kind of biggest the biggest item of that was removing the 2-child limit, Christine.
She did, and this was something that had been much debated and much trailed, and indeed we've got quite a good back catalogue on the 2-child limit as well. The 2-child limit costs about $3 billion in the final year to remove entirely. That is, and the Chancellor was very right to say that is a really important measure in terms of reducing child poverty and bringing children out of that headline measure of relative poverty. So we get about 450,000 children brought out of relative poverty through this measure. It does less if you're looking at, or if you're thinking about absolute poverty, so the really very poorest. But if what you want to do is bring the headline rate of child poverty down, this is pretty much the most cost-effective way of doing it. And it is going to do that in a way that's meaningful for families. In terms of what that means for children's longer term outcomes, the evidence base is a lot more mixed. So I think this argument of, oh, well, this is the fiscally responsible thing to do because we're expecting all of these long-term benefits from these children being better educated and earning more or whatever, jury is still very firmly out on that question. But if what you want to do as a government is say our political priority and our moral priority is to reduce child poverty, this is a really good way of doing that.
It's sort of like quite rare for this government where that part of the speech was like, we want to do this because we think it's the right thing to do. They clearly seemed more comfortable on that ground. We think it's the right thing to do. We're going to do it. All Labour MPs cheer. That was fair enough. That's just a political argument, and they're making the case and then doing it. It's just that is $3 billion that you got to find from somewhere that you can't use elsewhere. So, you're shaving $4 billion off public service plans and you're spending $3 billion on welfare. That's your choice, but it's a reasonable one.
Yeah, and you're right. They did make a point in the speech of saying we want to do this. There was also the inevitable language around, oh, and of course there are multiple costs, and this is a cost not just to the children, but also in the long term to society. So in my ideal world, the government would move a little bit away from some of that language that's really trying to dress this up as though it were a fiscal measure, when I think you're exactly right. What's happened here is the government's made a political choice about its political priorities, an entirely reasonable one, and it's pursued a good policy given that set of political priorities to try and achieve it.
And there's been quite a lot of discussion about that choice. It wasn't just a choice to increase the 2-child limit. It was also a choice to accommodate the extra increase in welfare spending. So, to allow disability spending to increase, send spending to increase. And what's raised some eyebrows, and that Ben, you and I have been asked about a lot in interviews the last couple of days, is choosing to borrow for that spending in the short run. So taxing to pay for it in the end of the Parliament, but in the short run, borrowing higher, debt higher. So we keep being asked about, should they have consolidated more quickly?
Just noting that it's interesting how the word borrow comes out the same in a really strong Teesside accent and a really strong Kent accent. I've only just noticed that. Anyway, she's gonna borrow for it, and yeah, I don't think there's a good case for if benefit spending is running ahead of where you think because unemployment is higher or because there's more disabled people claiming benefits, or there's like a weird line in it. They've discovered some more state pensioners by the sound of it. They've been hiding in a bingo hole all this time. But if you have an unexpected increase in benefit spending, you don't have to be immediately raising taxes to offset that, right? We can smooth through unexpected shocks. There's a whole point of like looking through turbulence. And so to some extent, it's reasonable to ramp up the taxes over time. I guess where I'm a little bit more skeptical is a lot of the spending on things like two-child limits coming in almost immediately, coming in about 4 or 5 months' time. So they're spending immediately, then the taxes don't really kick in until 2028, 2029. Some of them are even after the next election. And you have to ask the question of, if you continuously do the, extra spending now, but I'll do the tax rises later. And if you keep doing that over and over again, you are just going to end up borrowing more and borrowing more and borrowing more. And, governments have got a long track record of this sort of short-termist behaviour, and this is sort of falling into that pattern.
It's really stark as well. So if you look at just next year, the average household next year is on track for something like a £200 giveaway relative to what they thought the night before the budget. If you take that out and instead look at 2030, it's something like a £200 takeaway relative to what they thought. So really this is everybody next year is getting a giveaway. The poorest get a little bit more because of the two-child limit. And it's only once you start looking towards the end of the forecast horizon that, yes, the poorest third are still getting a giveaway. Everybody else is seeing some really big takeaways coming as mostly a result of some of these tax measures.
Well, the government might say, we would have frozen tax thresholds next year, but Jeremy Hunt had already done that. So
I could have cut them.
I could have cut them. Yeah, but if the only way to raise tax from a lot of people now is to freeze income and national insurance thresholds, which feels like a reasonable approximation of the truth, then the only option was the last 3 years of the
Before we get to that though, Christine, walk us through. I mean, what for the people who aren't on universal credit and getting more child benefit, what are they getting?
The biggest thing there is a change in fuel duty. So what we've seen is fuel duty is kind of perpetually due to increase, just not quite yet. In the near future, we promise this time really it's going to go up with inflation, and we promise this time really we're going to get rid of this so-called temporary 5p cut in fuel duty. We saw a little bit of the similar pattern this time around in that the Chancellor made a lot of noise about, we're going to continue with this fuel duty freeze. What was subtly different about this is that that's penciled in to run until September 2026, when there probably won't be a fiscal event for her to then say, actually, you know what, we're just going to keep this in train. So there is a chance that we might actually now see in about a year's time this temporary 5p cut to fuel duty being reversed, and for the first time in 15 years start to see actual increases in fuel duty.
Well, yeah, the reason why I think this might actually happen is it's set to go up by, I think, 1p, then 2p, then 2p, or something like that, gradually, where you won't see a big increase in the price at the pumps overnight. So I reckon we'd be pretty confident that 5p temporary cut from a few years ago, I think in the meantime, average petrol prices have dropped by like 50p a litre, will be unwound. But there is still the broader question of whether fuel duty will go up in line with inflation, which I don't think they've said will happen. But elsewhere on motoring taxation, there was a big change, which I think we should probably talk about.
Okay, go on then. Yeah, so I guess the big change there was we're getting a new tax. But lots of new taxes actually in like recent decades. A new tax of 3p per mile driven by electric vehicles. I think what the government's missed here is they've talked about it all in terms of electric vehicles needing to pay their share of taxes or pay for the wear and tear on roads. Actually, the reason to have this kind of tax, if you're going to have one, is that the big cost associated with driving is congestion. And that's what an economist calls an externality. So if I add to the rush hour, then it makes everybody else worse off too. One reason to get that down, one way to get that down is to basically put a price on it, to put a tax on it, and make people internalise some of that cost. But if you wanted to have a congestion-related tax, this is not the tax for you in some sense, because most miles driven have no congestion externality. It's a very, very small share of miles that contribute hugely to the congestion. So this kind of flat across the board, 3p per mile. Good they're doing something to tackle tax on EVs. governments have been dodging that for a long time now, but not going as far as we would like in actually tackling what's really the problem.
Can I be slightly kinder to the government here then? So first thing is just that
I did give them credit to say good that they did something.
Yeah, I know you did, but I'm going to be even slightly kinder than that. So, government's been ignoring this for ages. This is a genuine. It's something that has been put in the politically impossible bucket for a while, and they've tackled it. Fair play. And yeah, the congestion point, I get it. I guess there's 2 points about that. So yeah, clearly it's more costly and more traffic creating if you're driving through a city centre at rush hour on a Tuesday than if you're driving down an empty motorway in the middle of the night. But I suppose, like in London, for example, we already have a congestion charging zone. Could you deal with the congestion issue somewhere else? You could, I think Andy Burnham's got the power to introduce a congestion charger if he wants. He's not doing it for political reasons, but you could imagine something like this as a foot in the door. It's a way into having these things taxed in some way. There might be other ways of hitting the worst of the congestion issue somewhere else. I think it's definitely better than where we were a week ago.
No, I agree. I think it's better than where we were a week ago, and I think the foot in the door, if it is a foot in the door, something better, then even better. I think it's better with it than without it.
Or maybe it's a foot in the door, which we just allow to get slammed by the door over and over again for the next 20 years.
But I think there's also a learning element to this as well. So if you look at how they're planning on administering it, it sounds like you're going to make an estimate of how much you think you're going to drive this year. And
Barely at all.
And then vaguely at some point you're going to get your MOT, and your MOT is going to report what you actually drove. And you absolutely are not going to give your MOT guy 50 quid in cash to tell him to underestimate
isn't that standard for like second-hand cars? You just sort of dial the speedometer, the mile.
Well, you guys have different interactions with the garage than I do.
But I think what we've got here is we've got something that's actually really difficult to think about. How do you administer this well? I don't think that this is the right answer to how do you administer this well. But there's a world where you introduce this. Now we have a real actual problem of administration we have to figure out some sort of solution to. And we end up doing a bit more learning and a bit more focused thinking about how would we do this better and how do we improve on the design and administration. That would be the hope.
Okay, so point, yeah, but we all agree. Points for doing something. I like your phrasing, Ben, that it was in the politically too difficult bucket and it's at least come out of that bucket. So that's good. But should we, before we gloss over it, talk about the big measure yesterday, which was the thresholds freeze? I think I ruffled some feathers by saying that it's a breach of the Labour Party manifesto, which I think is really straightforward on the basis that when you freeze thresholds, including national insurance thresholds, more people pay tax. National insurance is higher for taxpayers. Revenues are higher for governments. The manifesto said no increase in national insurance. This is an increase in national insurance. So too, we'll go commitment to salary sacrifice. That's an increase too. So
yeah, just to stress here, because I think some people are misremembering. It's a bit like how no one ever remembers having supported the Iraq War, but some of you definitely did. The manifesto says we don't want to tax working people. Blah blah blah. That is why we will not increase national insurance. It does not say that's why we will not increase the main rate of employee national insurance. It doesn't say that's why we will not increase national insurance rate. It doesn't say any of that. It just says we will not increase national insurance. End of. They've increased national insurance, not last year as well, but then again. And I felt like I was going crazy. I got the manifesto up again this morning just to check, but that's just what it says. And I don't understand why it's so controversial.
It's one of the problems. I mean, these tax locks have many problems. They're problematic because they tie your hands before you know what you have to deal with. But also the fact that this is even a debate, the fact that people don't think they're clear about, you're trying to guess what the government intended. Like, they used the English language. We can just read what they said and interpret it, and they've broken the pledge. But people are worrying about did they actually mean that? And I think, it's part of the problem with the pledge. But looking through that, the threshold freeze has been an extremely lucrative thing that governments have been doing. I think when Rishi Sunak first introduced the first round of freezes, it was due to increase revenues by something like 8 billion, something in that ballpark. I think we're now already due to raise well over 40 billion before this happened. And then we're raising another 10 or so billion, depending on the year you look at. This, by the end of the Parliament, this will have been a whacking great tax increase, reshaping hugely how many people pay tax, how many high rate taxpayers there are. The idea people talk about, is it a tax on working people? Of course it's a tax on working people. Who else is paying the 50 billion? And these are big chunky tax rises. Should we look beyond the threshold freeze, however? I mean, look, we can't go through the entire scorecard because it really was a big one. People want to pick up on? Can we do the mansion tax briefly? Because that's it's actually not called a mansion tax, it's called something else. The
something surcharge
on council tax.
Yeah.
Do
Okay.
you want to be nice first about it, Ben? Then I'll say what I'm grumpy about.
Yeah. So I mean, the nice thing is, you'd say that if you look at our current property tax system, it's probably, I don't know, there's a reasonable case to be made that it's unjustifiably regressive, meaning that high value properties pay a much smaller tax as a percentage of their value. That's why you end up with these sort of things thrown around about mansions in London paying, similar amounts or less than relatively ordinary houses elsewhere. And this is a way to try and get at that. And if you want to tax better off people, you want to increase taxes on wealth and assets. Houses are hard to move around. It's a pretty economically efficient way of getting revenue. Raising taxes on property, it was largely symbolic. It's not like this is a big revenue raiser, but I'm fairly relaxed about it at that sort of level.
So I agree with all of that. With that said, here's why I'm grumpy. I'm grumpy because this is the government. The government is going to revalue properties, and that part of it is great. I mean, we're gonna do it. We're gonna actually revalue properties, at least some properties. But once we have those values, we're not going to use them for council tax. We're basically going to say for this new tax, we'll use up-to-date values, but for the same houses, we'll use the old values, the 1991 values for council tax. We will now know in hard evidence that there are some houses that are in the kind of wrong council tax band, but we're just going to look through that. And if this were a foot in the door to something...
Is it a foot in the door?
But is it? If I believed it a foot in the door, I'd be a bit happier. My concern is that what we're going to end up with is just this bolt-on. And people ask me with increasing frequency, why have we got one of the most complex tax codes in the world? And this is the answer. This is one of the types of reasons we have this complexity, is because it always seems to be the case that it's easy to add something on, to tweak something, rather than just say, no, let's just change the underlying structure. And even if some of those things don't end up being the next steps, you just end up with these barnacles all over the place. So I'm a bit worried that we'll be sitting here in another 10 years' time saying, we've got two taxes on property and one's based on 1991 values and one's based on 2026 values, and it's just absurd. So I'm grumpy that we didn't just graph and nettle and do something a bit bolder.
Yeah, they've clearly bottled the big property tax reform. But yeah, it could be the first step. You revalue these ones first. Maybe that raises some the
gateway drug.
The issue, the issues that creates looking at, wow, look how much that one's changed, that one hasn't. Oh, isn't it weird with all these features? Maybe that acts as the impetus to do this properly. Maybe you get the valuation methodology going. I don't know. It's
what side of the fence are you on, Christine?
I don't know. I think maybe you run scared because the tax itself is so poorly designed. As soon as you tip over this £2 million threshold, you're paying the same as somebody who's just below the next threshold. That to me sounds like a recipe for a lot of court cases and a lot of to and fro and a lot of no, but you didn't account for the fact that I took out the gold-plated tap in my bathroom, and so my valuation should be a little bit lower than it was. And look, I've made my front yard really messy, so actually the street value of my house is lower. I think there could be a lot of political pain that comes from trying to do this on quite a noisy group of people. And I worry a little bit that just makes the whole prospect of revaluation further rather than closer.
There's definitely a theme here in Christine's comments about getting around these taxes.
Yeah.
I'm going to get Christine involved in tax analysis in future, but how do you get around these taxes? You press your thumb on the MOT button and you...
run your house down.
Run your house down, yeah. Okay, so look, there is some good news there, but I really hope it is a step towards something better. I reserve the right in 10 years to come back and say, see, I told you it was another bolt-on, but let's hope I'm wrong. Should we do one more tax before we step back and assess what all of this means? And we should do the salary sacrifice stuff, because that's the sort of the other big measure here. Let's first explain what salary sacrifice is, because if you're in that system, you know exactly what it is, and if you don't, you probably have no idea what it is. So at the moment, this is about pension contributions, so upfront money into your pension. Some pension contributions are made by employees, so you do it directly into your pension fund. If you do that, there's no income tax on the way in, but there is full national insurance. Other contributions are done by employers. If they're done by employers, there is no national insurance, no employer or employee national insurance. And there are these funny things called salary sacrifice contributions, which, in my mind, kind of walk and talk like an employee contribution, in a sense the employee is deciding how much they want to put into their pension, but they are taxed like an employer contribution. You basically say to your employer, I want to put a certain amount of my money in my pension, and they reduce your salary and shove it into your pension instead. So that's the background here. And what the government has done is said, we don't like the extent to which people are doing that. You can have this salary sacrifice tax breaks, but only up to £2,000. So now we have this funny halfway house where salary sacrifice contributions up to £2,000 are still taxed like employer contributions. Above that, they're taxed like employee contributions. The problem I have with all this is that I don't think there's any good reason to be taxing employer and employer contributions differently. And therefore, until you answer the question, the government answers the question, why are these things so different? It's a bit hard to know what to do with salary sacrifice.
I think the other thing is the government saying, oh, we don't like the fact that relatively high earning people are using salary sacrifice to reduce their taxable income. Well, one reason they're doing that is because you've created a system with all these punitively high marginal rates and cliff edges where if you tip over, they lose all their childcare. And if people are using this to get around that and then you get cross at them for it, I don't know. I agree there wasn't any great justified principle for it. It felt a bit just like a revenue grab to me.
Yeah. But also a point that I kind of can't resist making is that I think it is odd, I think, that employer contributions are the biggest form of remuneration that has no national insurance at any point in time. Nothing on the way in, nothing on the way out. That is a very generous subsidy to pension saving. I think it would be worth paring that back. But big picture, looking through the salary sacrifice oddity, you could do that either by putting NICs on the way in or putting NICs on the way out. And actually, I think there's a better case of putting national insurance on the way out on pension incomes for a couple of reasons. One sort of technical reason about defined benefit schemes, so the kind of the nice gold-plated public sector schemes, where basically you can't put national insurance on them up front. So if you want to tax them, you've got to tax them on the way out. But also for the kind of a generational issue that this is a choice to tax future people who are going to save into a pension, leaving the tax break in place for all those people who have saved in the past. And you can make an argument about whether you want to do that or not, but I think there's actually a big choice embedded in this about how to tax pensions. But I don't think it was really a choice, at least it wasn't laid out as a we've really thought about the optimal tax design of pensions and this is what we want to do. It felt more like, I found a boundary, and if I shift the boundary, I can get a bit more revenue. It raises quite a lot, yeah.
Getting on for $5 billion or something?
Yeah.
I guess another reason, just very quickly, just why you might want to levy it on pension income instead is it's a good idea to have your sort of revenue stream linked in some way to what you've got to spend on. So if you've got a bigger older population and they all want to use the NHS and get pensions, it's quite nice to have a revenue stream that also grows when the older population grows. That might be another longer term reason to do this. But I just don't think any of this entered the equation. I think it was just we need to find another $5 billion. How can we do it that mainly hits the groups that we don't care as much about?
Well, and quite nicely, $5 billion in the first year, which is the year where the fiscal rules bind, and then considerably less than that thereafter, right?
Yeah, helpful.
Yeah. But also not coming in yet. So what everyone's going to start doing is putting contributions into their pension now before that comes in. So also going to be some forestalling around that. Look, we should step back and sort of bigger picture look at what this budget was. So as a recap, Rachel Reeves did not have this big fiscal repair job. Higher tax revenues have or at least higher forecast tax revenues have ridden to the rescue in some sense. She had a very kind of small downgrade related to expectations on her hands. She chose to kind of lean into the spending increases and spend more, lean into the tax high revenues and raise more taxes. We've got more borrowing, we've got more debt. But at the end of the period, if all goes well, more headroom against the fiscal rules. It was obviously a big budget in terms of numbers. That's undoubtedly the case. You can't have a budget that has revenues being almost 40 billion higher at the end of the period than previously thought, and have that not be a big budget, and one that has 75 new measures in the scorecard. I mean, in some sense, it's a huge budget. But we were talking a lot last night as we were chewing through all of this and working out our remarks this morning about a bigger ticket assessment. I think we've come to the conclusion, Ben, that we're just a bit underwhelmed, actually.
Yeah, I think it's a little bit as like from a point of political weakness, right? Which is not our area of expertise, but we can all read the polls and read the news. It's like almost like a retreating to the comfort zone a little bit. It's pivoting away from growth and unlocking productivity and so on, and a bit more back to straightforward tax and spend redistribution, shying away from the big reforms that might meaningfully move the dial. Even on redistribution, right? Because even if you really said, we're for working people, or we need to rebalance the economy to work better for working people, you could imagine a big set of measures about that, about what that means for pensioners, what that means for the tax system, what that means for benefits, all sorts of things. There was none of that. Just a few little tweaks here and there that maybe hit the right people or help the right people. And then on growth and tax reform, like we're going to do property tax for the first time in ages. Great. What are we going to do? We're going to raise a couple of $100 million and create this obscure, new, complicated bolt-on.
You're in favour of this.
I was just trying to be the other side of the argument. I knew you were going to start being cruel about it, so I was trying to be balanced. But it's just like we're going to do this. Oh no, we're not. We're going to do a half-baked measure instead. And I just think I would have liked to have seen a little bit more ambition, a little bit more. Maybe a little bit more risk taking, a little more big thinking. It just felt very safe.
What do you think, Christine?
Well, I think part of that is this is the background that we had going into this. So if one chart that our colleagues presented this morning looks at real household disposable income, which is as good a measure as we have of living standards, this parliament is going to grow by about 0.4% a year, annualized. That is very comfortably the second worst growth in living standards that we've had since the late 1970s. And by very
in our lifetimes.
In our lifetimes. And by very comfortably, I mean the third worst is more than twice as good as what we've got this parliament. The only one that beats that is the last parliament, when household living standards actually fell. So if you're in this world where everyone is muddling along and things are getting worse and then not really getting better, that makes all of these trade-offs and all of these tensions and all of these how do we balance the winners and the losers, that makes them so hard to navigate. And I think that is and has been sapping the ambition. What we didn't see was, well, what are we going to set out and what's the actual big picture plan to try and change that trajectory going forward? What we saw was, where's our comfort zone of trying to manage and finesse and just about muddle through all of these trade-offs?
And the Chancellor was on record many times saying that growth was the government's number one mission. Great, it should be. I've said it many times now. It is the thing that would make everything easier. It would make that living standards picture that you just painted, Christine, rosier. It would make it easier to manage the public finances. And, we should be clear that there is no magic growth lever in Treasury. You should never expect a government in one budget to just turn this ship around and have it all be okay. But I think given the scale of the challenge, given how much Labour has spoken about wanting to have these big grand, we're going to change everything, I think we should be expecting more from our budgets, actually. Like you've been, I'm just a bit underwhelmed. You stand back and you think there were some choices here for sure. And, budgets are always full of political choices, as they should be. But I think there's actually just not very much to get excited about. Not a huge downside for growth, not a massive problem. It's not making growth hugely worse, but it's not making it better in any particular way. And so I just don't think we can afford to have budgets that look like this in some sense. I mean, the growth problem is so bad. The pressures are so strong. Budgets are going to keep being hard unless we can move the dial on growth. I think we have to just stand up and say, we need better than this. We need budgets that are willing to do more. But of course, what we're asked, Ben, which is the reasonable response to that, is, go on then, what would you do? What would you do to make it better?
Well, just before that, I guess it wasn't terrible, right? This wasn't a disaster.
No.
It wasn't going to implode. It was quite carefully calibrated to give bond markets what they wanted in terms of additional headroom, not too much extra gilt issuance. It was carefully calibrated to give the backbenchers something to cheer about and feel happy about. Like, they had some core constituencies and they met them, and they might be looking at this and thinking, job well done. But then, for what? Like, there's so many stories in the press about all these big grand things they were thinking about doing, and then they all just decided, it's too difficult, we can't do that. Oh, we might upset someone, we can't do that. And there was at one point there was a discussion that they might break the manifesto pledges and do a big, to use our favourite word again, a big stonking tax rise to then maybe put the government in a much better position going into the back end of this decade with more things to show for it and maybe an ability to loosen prior to the election. I think that's a political choice. But what's this for? Apart from, I guess, it feels like a little bit like short-term survival. So what could they have done differently? We're going to touch property taxes. Great. Let's do something proper and bring it into the 21st century, which basically every economist thinks would be good for growth if you could find a way to shift it away from stamp duty towards a more rational property tax system. Like, great, we want to have more founders, we want to have more entrepreneurial spirit, we want to have more investment in the UK. Great, let's think about how we tax savings and investment. We're going to finally deal with the electric vehicle issue.
you could try
for almost anything they're talking about. You could have gone right. Let's do that properly. Let's go all in. Let's have something to show for it. Oh, we want to do redistribution. It's not fair on workers. Fine. Do something about the triple lock. Do something about the sharp cliff edges and marginal rates in the system that really punish people who are trying to get on. Like, there's just so many things you could have done. And
I'm very much enjoying sitting here being the one who's now not the broken record on tax and reform and letting somebody else say the same thing. But you're absolutely right.
Yeah.
I mean, I think it's actually really sad if we're in a position where genuinely the idea of like bolting on a new tax on top of something else is the best we can do. And like undoing a temporary 5p cut to fuel duties ends up being something that's like lauded, like, oh, good job. It's like, really? I mean, that is a pretty low bar. I mean, if we were going to tackle the problems in our tax system one at a time at that speed, we're never going to get to a better tax system. We have to, I think, kick it up a notch and be willing to do bolder things and to keep doing bolder things. And not each one of them will score in the OBR as a big move in the forecast. And we shouldn't only look for those things that do have big material shifts in the forecast. You have to keep doing all of the smaller things that chip away at the problem and just keep making it better and better and better. And eventually, I think you would start to see material improvement.
I think what was striking to me about the 2-child limit thing again was it doesn't poll well. But the government's decided to do it anyway because it thinks it was the right thing.
They've owned it.
Yeah, they've owned it. It's quite a convincing part of the speech. Like, when the US was doing its Apollo program, it wasn't popular with the public. The public were like, why are we wasting all this money on space stuff? Who now thinks that was a bad idea? Like, sometimes just have a vision, own it, do it.
We do these things not because they're easy, because they are hard. Is that the...
You should write that one down.
Yeah.
I don't know. It just feels a little bit...
Okay. Look, before we do too much more, what you can see, the sleep deprivation is very much kicking in. Any last thoughts from you guys before we try to sum up this stuff? Takeaways.
I think this growth point applies to what we've seen on public spending as well. So we've talked a lot about tax and tax reform. What we've talked less about is the public spending plans that we've got are, by the way, a third of the headroom is coming from public service efficiencies on top of already very, very aggressive or robust efficiency programs. What they did do well is they prioritized capital spending. So that is a win for growth, and they deserve some credit for that, not just cutting it at the first sign that something gets hard. But this broader picture of like, what have we done? We've put up personal taxes, so we're reducing some of the labor supply incentives in the economy. We've put up quite a lot taxes on investment and savings and dividends, so we're reducing some of the incentives there for private and personal investment. And then on top of that, we've got government spending, and we're just going to be a little bit fuzzy about how we're actually going to deliver that and what it is that we think is a reasonable proportion of government spending and how it is that that's actually going to look on the ground. What I think the real risk there would be is that we follow the pattern that we've seen previously, where we say everyone's going to get a similar X% cut. Everyone's just going to have to work out how to do the same set of things that they do right now, just a little bit more on the cheap. And we're always going to duck those hard decisions about if this is the new spending envelope, if this is how much we want the government to now spend on public services, what is it that we are not going to do, or what is it that we're going to charge for, or what are we going to do less of, or what are we going to means test? But what are the decisions where the state is actually going to take a step back from something rather than just pretending or trying to do everything a bit on the cheap?
Yeah, absolutely. Ben, any last thoughts?
My last thought is that I'm ready for a sleep.
Yeah, me too. Okay, let's try to wrap. In fact, I can't have a sleep yet. I've got more to do, but let's wrap this up. Look, this was undoubtedly a big budget. More taxes, more spending, more borrowing, more debt, more headroom by the end of the fiscal forecast. And there were some bright spots. We should give credit where credit is due. There were some bright spots. The Chancellor deserves credit for building higher headroom, raising more tax than she needed to raise in order to give herself more wiggle room, hopefully helping ensure that we're not going to have another year like this with this awfully damaging speculation about what may or may not happen and what she may or may not be forced to do. Worth remembering that this was not a budget that was a response to a big fiscal repair job, actually. Rachel Reeves basically made a choice to raise taxes, partly in order to spend more and partly in order to build herself that wiggle room. They were choices. I think what you've heard today is that having chewed over the budget overnight and reflecting, we're all feeling a bit underwhelmed. I mean, the big central issue for the country, for our living standards, for the future of everyone, is that poor growth. The government hit on the right problem. But this was not a big budget for growth. This is not the government moving the dial. And given the scale of the challenges, we can't afford to move as slowly as we are moving. I think one reflection I have, thinking about how historians will look back on this budget, I suspect it might be remembered most actually not for the individual budget measures, but for the process. The huge amount of speculation running up into it, all about a fiscal repair job that didn't actually exist, and the kind of cherry on the cake being the accidental leak by the OBR of the budget document before the Chancellor even stood up. We do not need more budgets where the process is bigger news than the budget itself. We need budgets where actually they are going to be the kind of budgets that give Chancellors legacies, where they can really say, I moved the dial on something. I think to end on a hopeful note, and it's good to be on a hopeful note, that headroom really should do some good things. If we can have another year and next year be one where we're not having lots of speculation about what she might have to respond to, maybe the government can use its bandwidth to really think about how do they deliver on some of their current plans, how do they deliver on achieving higher public sector productivity, on making those investment plans they've already put in place, actually delivering those well, on making the strategy work properly, on coming up with new ideas to put in the next budget, to make the next budget a more enthusiastic one. So let's hope that we can do better, because if we can't, then I'm even more worried about the future. But for now, thank you so much to Ben and Christine. Thank you to all of you listening. If you enjoyed this episode, please do share it with other people. And if you would like to subscribe, you can become a member for as little as £10 a month. We look forward to seeing you next time, when we will hopefully have had some more sleep. Bye for now.